traders, welcome back. Michael Harding here from the Academy of Financial Markets. Thank you for tuning in. In this lecture, I will explain what support and resistance is and how to use it, how to read it. Okay. Now, support and resistance is a term used in technical analysis, and it refers to when price points reach a certain level and are either supported or resisted. Okay, so for an example, right now we're taking a look at USD CAD on a 4-hour time frame, and this pair is trading within a bullish trend, and we can see that it made several attempts of breaking lower than these levels, but it was being supported. So this is what support refers to, and resistance is basically the opposite. Resistance can be on the top. So right now we can consider that we're actually trading within a rising channel at the moment, and when price reaches a certain price point and is unable to break through it, it's being resisted. Okay, now a very easy way of spotting where the resistance is once you're able to identify support is basically just sort of replicate the angle. Okay, so you can see this is sort of the same angle, and you can just basically like mirror it, and that will get you your level of resistance. Okay, so that's only if it's trading within a channel. At times too, you might see the channel widen out or get thinner at near the top. That's common. It's not always like this, but it's very common that you'll see sort of the same thickness throughout the channel as it's continuing to trade. Now, general rule of thumb is that support will tend to hold unless something significantly happens. Now, what could be something significant that could happen that would break through a level of support? Well, it could be something related to fundamentals like say for example GDP or some sort of economic report came out, and it was, it might have been consolidating heading into the report, and then once the report was released, it then caused either a breakout to the downside, so it broke below this rising support, so it broke out, and then it might fall down to another level where we might see some sort of support. So for example, if we are able to crack below this rising support level here, the next level that I would look to for sort of a retest would be this area here, because we had some sort of support in the past. So this is on a 4-hour, so whatever happened here for it to consolidate, I would expect some sort of retest of this level before breaking lower. So we might see something like this, and then sort of a bounce, okay? And then we might get continuation to the downside like that. Now, support and resistance, like I said, does tend to hold unless something significantly happens. And how are we able to tell if support and resistance is going to hold up or if it's going to break? Well, in most cases, whenever we see some sort of momentum coming down to a level of support, that's when you sort of want to be cautious, or momentum rising up to a level of resistance. Again, that's when you want to sort of be cautious that the level might break. Okay. But there are times when we might start to see a bunch of smaller candles developing, and it's sort of like an indecision, candles, dojis, and stuff like that start to develop, and it's showing that there's sort of lack of momentum in the marketplace. And so like when we get lack of momentum in the marketplace, chances are we will see a bounce if it reaches a level of support or resistance. Okay, so support and resistance can be on on an angle. It can also be horizontally. So here in the past we saw that this level, we were getting lots of resistance here, and then finally we were unable to break above, and we continued to sell off. Okay, and let's just take a look at some more examples. So here we have the pair selling off nicely, and there was sort of a smaller, sort of like a very light level of support. So it was supported, and finally, like I said, when support is broken, it then becomes resistance. So here support was broken, it's now being resisted, and finally, once we were able to break back above this level of resistance, we're then being supported again. Okay, so that's USD CAD on a 4-hour time frame. Let me just zoom out to a daily. Okay, now when drawing in support and resistance on larger time frames, they definitely hold up a lot stronger than on smaller time frames. So like if we were to draw in support and resistance on, say, a 5-minute, you know, the support and resistance isn't all that strong. The reason for that is because you have to think of it from a market psychology perspective. When we look at the daily, there's more traders looking at these levels, okay, versus a 5-minute, right? It all really depends on the trading session as well, who's all trading, who's all in the marketplace at the particular time. But you can imagine that support and resistance on larger time frames does definitely hold up a lot stronger because more traders can see it. More traders are looking at the exact same thing, right? So for example, here in the past where we had this sort of level of support, this area here, right? It's basically, it held up because, lots of traders are looking at the same level. If you're looking at buying USD CAD on a daily and you see these lows here, you saw sort of this low was tested and then immediately it was rejected, and you might have missed that opportunity, and then sort of a few weeks passes and you look at the charts again and you're seeing that the same low that was rejected previously, we're now at that price point again. Chances are there's gonna be buyers in the marketplace, right? Because more traders are looking at this. So that's why the daily or the larger time frames holds up a lot stronger than the smaller ones, because it just allows more opportunity for more traders to look at the charts and see the opportunity available. Okay. Also, I just want to go down to a smaller time frame as well, just to explain how sometimes when we have these levels of support or resistance, there's ranges within ranges. So this could be considered a declining channel, but also within this channel we have sort of a mid channel. So you can see that there, right? And it's funny the way it works is because like the thickness of each of these channels here is a way that you can sort of predict where we might see some sort of resistance afterwards. So if I were to just basically measure the thickness of each of these smaller ranges, and just place it right there, you can sort of visually see. That's why we sort of got this level of support here where it sort of just rounded it off, right? Because they're all pretty much the same, and we can do that again here as well, right? So you can sort of just keep building it, and it works great. Tends to work. Doesn't always work with all pairs, so but it works great with the USD CAD. So that's something that I always do. I always, whenever there's some sort of breakout, I want to place a target, and in order for me to know where I should place my target, well, I'm just looking at the previous heights, thicknesses of these ranges, and then I'll basically build upon it and take it from there. So if I were to get into a trade here, I would only be looking to target this, and that the reason I put my target there is because I have this, I just drew in the thickness, right? So that's sort of lots of levels of support and resistance there. They're also known as pivot points. So pivot points work really well. I'm going over pivot points actually a little bit further in the next video. I'm actually sort of jumping ahead. So tune into the next video and I'll show you some more about pivot points.